The tokenization era isn't coming. It is already here. From Robinhood to the Nasdaq to BlackRock to Credit Agricole to Ripple, Avalanche, Coinbase, Hedera, and pick a name, pick a number. All of these entities are moving to merge traditional finance with crypto and blockchain. Billions right now are flowing into regulated rails. That's soon to be trillions. Bitcoin just hit all-time high. The total crypto market cap just hit all-time high. This is quite literally your final warning to understand what's being built and to have a plan before the top. What is up, everybody? Solomon here. I hope you guys are all having a fantastic day. There is too much to get into, so I am just going to hop right in. The freight train of tokenization at Token 2049, Robinhood CEO Vlad Tenev said it best, quote, "Tokenization is a freight train that cannot be stopped. It is going to eat the entire financial system." When you have the CEO of an entity like Robinhood, who operates $110 to $125 billion. They manage $280 billion in assets and serve over 27 million customers, telling you that tokenization and crypto technology isn't just here as some niche fad market. People aren't just speculating anymore, and the entire financial system is going to be ate by the tech. You start paying attention. In June, Robinhood launched 200 tokenized US stocks in Europe, letting users outside the United States buy Tesla, Nvidia, Apple, and more as on-chain assets. Tenev said tokenization will become the default way to get United States exposure abroad, and that within 5 years, most major markets will be live and will be tokenized. How massive is that? Pretty freaking massive. Wall Street and Web3 collide as they have been for some time now. As we mentioned a few weeks ago on this channel, Nasdaq has already filed with the Securities and Exchange Commission in the United States to trade listed equities in tokenized form. Literally a digital twin version of the stock market where everything is tokenized, has more utility, X, Y, and Z, with the same levels of compliance and assurances that all of the clients that trade stocks would want to have. If approved, this would move the stock market from T+2 settlement to T+ seconds, instantaneous atomic settlement. Goldman Sachs and BlackRock are already deploying tokenized money market funds. And BlackRock's Larry Fink recently said every stock, quote, bond, every fund, every asset can be tokenized. And they're not alone. Credit Agricole with 2.4 trillion euros in assets and over 3 trillion assets under management is exploring blockchain-based settlement rails. Interesting, and shout out to Nick Quamfee here. Interesting little LinkedIn find. Head of digital assets group at Credit Agricole asking the head of Quant Network, Gilbert, can you explain the integration with the bank core banking account and payment engine, how that's done? Thank you. We'll set up a call to go into the technical details for bank side integration. You've got head of digital assets group at Credit Agricole saying, looking forward to it. 2.4 trillion, as I mentioned. Meanwhile, Boston Consulting Group and Ripple project the tokenized real world asset market to grow from 600 billion in 2025 to nearly $19 trillion by 2033. And that number is still just a drop in the bucket. We've said it multiple times on this channel. Real estate industry globally, about $300 to $400 trillion, depending on where you're pulling numbers from. You get into derivatives, you get up into the quadrillion plus dollar range. All of these numbers aren't theory. You literally have the CEO or the head of Robinhood saying that that's just a freight train made of money, and the train has already left the station. I'm going to move over to Avalanche, Coinbase, and Institutional Access. You can check out these articles at genfinity.io if you want to. And Avalanche Treasury company just announced a $675 million SPAC merger with Mountain Lake Acquisition Corp. This is a deal that creates a NASDAQ-listed gateway for institutional AVAX exposure. It brings $460 million in treasury assets and claims to exceed $1 billion AVAX holdings, giving institutions access to AVAX at a 23% discount to NAV. You can read this full article here. Institutional on-ramps are multiplying, and they are not limited to Avalanche. As we can see, Coinbase news as well. Coinbase pursuing a national trust charter to enhance regulatory frameworks. They have just filed a national trust charter with the OCC, not to become a traditional bank, but to secure fiduciary and custody powers for tighter oversight. This move mirrors Ripple's own trust bank application, showing that major exchanges and payment networks all see the same future. And that future is crypto assets that are regulated and bank-grade, institutional, not only ready, but operational. I want to get into the Ripple news. Let's talk Ripple respectfully and realistically here. And let me see if I can find this. Yes, we have it up. All right, the Ripple National Trust Bank application is now viewable and live. It's a bold step. But from what's publicly filed, it's focused on managing stablecoin reserves and fiduciary operations, not XRP custody or settlement. There's no explicit XRP utility in this filing. That's not to say, obviously, that they don't have plans in the future. But I saw a lot of tweets over the past 24 hours that basically were like just the word boom with a lot of emojis. Anyways, the resistance is real. 42 major U.S. banks, including JP Morgan, Bank of America, et cetera, have opposed the charter, while the ICBA urged the OCC to delay or reject it. So while this is obviously bullish for Ripple's compliance, calling it XRP immune fuel may be a bit premature, but it's a strategic move in the right direction and not surprising. I did a deep dive probably in 2020 or 2019 on the Office of the Comptroller of the Currency and their special purpose national fintech charters for non-depository institutions, talking about how interesting it would be if some of these crypto entities ended up deciding to become basically banks. And that is exactly what we're starting to witness maybe 5 years down the line, but it is happening nonetheless. I did a recent interview with Dr. Lehman Baird, as well as, let me see if I can find this because I've got way too much content up today for you guys. Dr. Lehman Baird, as well as Brandon Wolf, who's the head of the biggest Cardano wallet, which is Lace. And that was pretty interesting. You guys can check that out right here as well. We got some pretty good short form content from it. The full interview is from last Thursday. I can go to @Genfinity.io and check that out. But all these major ecosystems, and this includes Ripple, XRPL Labs, all uniting under the DeRec Alliance or Decentralized Recovery Alliance, creating a quantum-proof, invisible recovery standard. I really liked Brandon Wolf's comment and quote from within this interview. And he says, we don't want the users to have to understand how recovery works in order for it to save them. And I think that that is the type of forward thinking, it's the type of user experience that we should expect in crypto and Web3 for mass adoption. If you think about where we're at right now with seed phrases and everything else, really nothing since 2009. I'm sure most people that are probably watching this video have just pieces of paper somewhere. And we really do need to have a different kind of agnostic standard. This is why you see entities like Ripple, XRPL Labs, Cardano, Algorand, Hedera, Constellation, Casper, all these different ecosystems coming together under the purview of DeRec. Data and energy on chain. So we've got BNB and Chainlink. If I can find this quote here, BNB Chain integrating Chainlink's data standard to bring U.S. economic data on chain. Chainlink, as I've mentioned, has been absolutely just destroying it recently. This is not sponsored by Chainlink, but I'm going to talk about what I want to talk about, and they've had a lot of traction recently, especially BNB, obviously breaking all-time high too. How many of you guys remember back in 2020, like 2018, 2019? I remember like a $2 or $3 BNB, which is wild, and I think it's above $1,000 or something crazy now. But BNB just integrated the Chainlink data standard, streaming official U.S. Department of Commerce data on chain, GDP, PCE, and spending. Now, at the same time, and I'll give a huge shout out to Kevin Cage here, and I'm hopping around just because literally there's so much content to get to. Kevin posting, and if you don't follow Kevin Cage, one of the OGs, really good guy. Definitely give Kevin a follow. One of the few left that is still pushing out content from the beginning. Zoniqx and One World Petroleum launching the world's first tokenized oil and gas fund on Hedera. This is real energy assets, regulated structure, and global liquidity. I mean, bottom line here is the internet of value is no longer a theory. We're literally watching it unfold in real time. It's oil fields, it's macroeconomic data, all of this stuff flowing on chain. Institutional demand as well. And let me see if I can float back over to here. You've got Rex Osprey, which just announced or just released, I think it was the Doge and the XRP ETF, right? They filed for 21 additional ETFs, including XRP, AVAX, HBAR, Link, Solana, XLM, SUI. These aren't synthetic futures. They're regulated real asset structures being proposed under the Investment Company Act. Once approved, institutions won't need to touch tokens directly to gain exposure. They'll buy ticker symbols. I think this is really interesting how much adoption we've seen over the past 12 to 18 months as a sidebar, and it is very difficult to keep up at this point in time. Trying my best here for you guys, though. And I kind of want to go maybe two last things here. I saw an interesting tweet from Andre Casterman. If you are not aware of who Andre is, definitely deep in the weeds with the XDC ecosystem. This guy's one of the smartest people that I've had the ability and access to interview a few different times. I'll have to try to reach out again and do another interview with Andre, but he essentially ran Swift's supply chain and trade finance department. He was at Swift for a number of years, 24 years at Swift, leading various innovations in the interbank payments, corporate treasury, trade finance, global head of corporate and supply chain market at Swift, chair of BPO innovation. I mean, the guy's resume is pretty wild. And he's quote tweeting from Michael Saylor saying, if Bitcoin goes to a $100 trillion market cap, there will likely be $200 trillion of credit on top of it. And Andre saying it's all about extending credit. And $XTC, full disclosure, Genfinity does have a media partnership with XTC Foundation. That being said, I definitely need to reach back out to Andre again and see if we can slate in another interview. That guy is a wealth of knowledge. And I kind of wanted to do a little bit of a final warning here, if I can find where I wanted to land. Yeah, here we go. All right. So this is my kind of, I don't know if this is a final warning, but it's a warning. Bitcoin broke all-time high. Crypto total market cap just broke all-time high. And the markets are shifting, obviously, from speculation to adoption. However, the markets are going to do what the markets do from a speculation standpoint still. And I will just give my fair warning, as I've mentioned multiple times before. I know that many people are saying that this time is different, or will start saying that this time is different. But I will tell you, regardless if this time is different or not, if you do not have a plan for what you are going to do, where your goals are, what your targets are, you will get washed away by the wave that you literally just helped to build over the past couple of years in this space. Set your targets now for where you want your crypto to be or to take you. If that is retirement and some crazy high price thing, great. That's on you. I will tell you, for me personally, I don't set ridiculous targets anymore for things, but I also don't sell out of things. Like for me, XRP, HBAR, Quant, definitely like XDC. I mean, some of these assets, I just like plan to probably just hold for the long term regardless. And like for context, it took XRP like 5 years to break it took XRP 6 years to break all-time high. What was 2018 to 2024, late 2024 or early 2025. So for me, like I've dealt with a lot of BS prices with all this stuff for years. So I don't ever plan to sell all of my certain assets, I should say. But you should have a plan regardless. You should set targets. You should have bracket orders, have profit zones written down. You should know your exit rails. We do see a lot of the times in crypto that like if you just have one on-ramp or one off-ramp, That stuff locks up all the time when prices go to certain levels. Think of Coinbase. I'm sure it's a little bit better now, but I remember literally Coinbase being down right when stuff starts to peak or right when stuff crashes. So definitely having multiple exit ramps, whether that be stables, stable coins, ETFs, fiat off ramps, whatever it may be, you should know all of that stuff in advance and have multiple backup plans as well. Stay liquid but secure. I know I've talked before about this. I do believe the final iteration of what crypto could look like for us in an ideal world and a romanticized view of crypto is eventually maybe we don't have to sell it all. Maybe we leverage our assets just like the wealthy 1% of 1% of people do right now. And you don't have to sell, but you can borrow against them and, deal with all, the tax benefits of doing things like that. Obviously, crypto is very volatile right now, and we're not there yet. But stay liquid but secure. Prefer regulated issuers, regulated stable coins, things like Ripple USD, USDC. And I'm not advocating for any one of these individually. I'm giving you examples of ones that seem to be transparent and trying to fall under the purview of compliance. USDC, EuroC or EURC. Keep tax lots organized. Export your CSVs before the top. Test your recovery methods, whether that's MPC, DeRec, multi-sig. DeRec's not live yet, but it will be. Whatever you use, simulate a loss event and try to recover it. Stay sane. That's the biggest one, because I saw a tweet like a couple days ago. It was like some guy trying to get people to follow him. It was like, follow me. When this happens, it's only going to last for 3 or 4 months. Well, first off, if we're about to top, historically, it's not 3 to 4 months. It's like 3 to 5 weeks, 4 to 6 weeks, maybe max, of one of these parabolic events. So the 4 to 6 month thing is kind of a little bit ridiculous. But no FOMO buys at all-time high. I mean, I really haven't been like buying anything for a little bit of time at this point, but that's up to you guys if you want to do that. I know a lot of people do advocate for like, hey, I'm fortifying positions during a dip and stuff like that. That stuff makes me kind of nervous. Like I am just kind of happy with where I'm at. I try not to get greedy and waiting to see whenever everybody else gets greedy and hopefully offload a little bit. The goal is never to call the top. It's to keep what you earned and hopefully make a little bit in a situation-changing event, at least for me. I know a lot of people say life-changing money. I think it's much more powerful to say situation-changing. If I can pay off a car loan or if I can pay off X, Y, and Z and it slowly changes my situation, that type of mindset is going to enable you to be in crypto and in blockchain and digital assets much more sustainably for a much longer time than thinking you're going to get rich, trading, trying to chase green candles is going to get you wrecked too. Again, none of this stuff is financial advice. This is literally just my thoughts. So yeah, I mean, I do feel like, even just look this week. So previous all-time high, we were sitting like right at like, let's say 4.17 trillion. We are above that right now. We just close our last weekly candle. This weekly candle is above it. This will close on Sunday, and it'll be interesting to watch what happens. I wouldn't be surprised to see crypto, and I would have thought this years ago. I would have thought we would already be at a $7 or $10 trillion market cap. I saw a post saying that XRP surpassed BlackRock's market cap today. $182.61 billion is BlackRock's market cap. You got XRP sitting here at 181.39 billion. Isn't it wild when you think of, not only BlackRock, but I think it's Nvidia that has even a bigger market cap than all of crypto combined still, if I'm not mistaken. Let me look that up, it's a pretty crazy stat, but Nvidia market cap. Yeah, Nvidia's market cap is $4.51 trillion. So one company, and I'm not saying Nvidia is not a monster of a company, but one company is still bigger than all of crypto combined, which is wild, right? By about 270 billion or whatever it was. That's pretty crazy. We this industry, crypto is still so new. I mean, when people ask, oh, what is it? I saw this tweet too. Let me see if I can find this tweet for you guys before I hop. And I know I'm sorry, I'm usually a lot more, I don't want to say scripted, but I have like a flow going because I have so much content loaded up. I saw this tweet 16 years ago today. You could buy 1,309 Bitcoin for $1. This is the first recorded dollar valuation of Bitcoin, calculated by electricity cost to mine Bitcoin at that time. The people crazy enough to think they can change the world are the ones who normally do. Mid-market exchange rate, a dollar on October 16th, 2009, $1 would have gotten you 803 Bitcoin. To put that into context, I really do believe that, I think Bitcoin's great. I go back and forth and think about holding, I don't hold Bitcoin right now, but I've held Bitcoin multiple times in the past. I just think it's more like, are there assets that are going to outperform Bitcoin, diminishing returns and everything else? Do I think Bitcoin eventually hits $1 million? It's probable, if nothing bad happens. But at the end of the day, that's like less than a 10x, right? And like a lot of crypto, you could probably still bank on finding things that can 50 or 100 or even 1,000x. I talked about BNB. I mean, BNB from 2018 to 2025, probably 1,000x. There's lots of stuff like that. But anyways, I still believe that we are still so early in crypto as a whole. I mean, I fundamentally believe this, that you have all of these institutions and these entities. You've got BlackRock and all these big players literally telling you, you got that CEO of Robinhood saying that tokenization is going to eat the traditional financial system. You had Swift last week say that they're going to run a blockchain ledger as infrastructure. I mean, what else does everybody need to see at this point to understand what's kind of coming? And I'm not saying that we sit here. I am actually a contrarian to the people that are saying that this time it's different right now. I don't think that this market cycle is different, and I hope that I'm wrong. I think we're going to probably have a blow off top. I would imagine we go back to $3 or $4 trillion and retest maybe next year, maybe a year and a half. And I just think that the tokenization bull market isn't going to be this cycle. I think it's going to be 2028, 2029. Because there's still a lot of regulatory stuff that hasn't been flushed out yet. I don't know. Anyways, plus you kind of have the alignment of some of these huge institutions basically saying stablecoin market cap 2.6 to 2.8 to $3 trillion by 2028 or 2020 or 2030. That being said, I still think that this industry, if all assets are tokenized, and we are literally looking at some of the networks that are going to be here 30, 40 years from now, that even $100 into any of these into one of these networks, probably 30, 40 years from now, if it stays around and it's widely adopted, is going to be a legendary thing. So that's how early I still think that we are. That being said, I still think that probably 99% of probably cryptos probably die at some point. I mean, look, there's probably 20 million cryptos on CoinMarketCap right now. I remember in 2020 or 2021, there was 11,000. So that's definitely not sustainable either. But anyways, have a plan, as I mentioned. So 16 years ago today, you could have bought 1,309 Bitcoin for $1. The people crazy enough to change the world are the ones who usually do. But the ones who plan for it get to keep it. Tokenization is here. Regulation is here and continues to come forward. Institutions are definitely here. So this was kind of your final warning. Stay grounded, stay informed, hold fast or don't hold fast, but have a plan that works for you, because anybody that tells you what your plan is wrong, because they're not you. Every single person in the space is totally different, has totally different life circumstances, totally different financial situations. Generally, if you follow don't invest more than you're willing to afford to lose, do your due diligence. Don't get caught in the greed stuff that is just going to happen to everybody. It's almost the reason I basically stress to have a plan too is if you don't have a plan and crypto starts really taking off, as soon as you start running your calculator and you're like, oh, well, if it does this and this, you're probably in danger already, because like when you get to that point of that 4 to 6 week, 3 to 5 week point in time where stuff just seems to not be able to go down, it becomes very difficult to make sound decisions. And I've seen so many people, including myself, I mean, with some things, just hold stuff for 4 years waiting to break even. And you do not want to be that guy or that girl that's doing that. So if you found this information useful, I know this was a longer one, please subscribe. Please drop a comment. If you have a plan, let everybody know, maybe in broad strokes, what it is or what's worked for you. And share this with somebody who still thinks tokenization is 5 years away and crypto is a scam. But I hope you guys enjoyed this, and I'll talk to you when I talk to you. This was a little bit of a longer one, but yeah, I appreciate you guys watching. See ya.